accurate. As you can see here, we are now in I put it on 1 hour time frame of NASDAQ. This is about this indicator. So the world indices, it's very simple. We have a bunch of assets. In this case, these are indices. I'm going now to try and to put the dollar index, NASDAQ, S&P and RTY only. First of all, it works. Once one of these bottoms, in this case, this is NASDAQ blue, S&P blue, and RTY blue. Once they are above zero and the dollar index in green is below zero, we buy NASDAQ or RTY or S&P or three of them. If the US dollar is up, NASDAQ, S&P and RTY are also above zero, then it means we have a trend divergence, because this is the optimal scenario what we can see here. Dollar down, the indices up. So if dollar is up, the indices are up, we buy NASDAQ, but we don't trade the trend. If, like you can see it here now, NASDAQ is up, S&P is up, RTY is up, dollar is down, it means that the trend, the uptrend of NASDAQ is very strong. So we trade the trend, meaning we let the profit run and we don't take profit, we let the profit run. And our stop loss is based on trend strategy. So meaning we don't trail it too tight. We don't put the stops too tight. If the dollar is also up, like the other three assets, meaning all four are above zero, then it means we have trend divergence. In this case, we can buy NASDAQ, but we work with take profit. We put a take profit order, and also our stop is tighter. And vice versa. If dollar is down and these three bottoms are below zero, meaning we sell, and if dollar is down and these three are also below zero, also down, then we can trade NASDAQ short or the indices short, and we put our stop very tight and we work with take profit. So if, like here, for example, dollar is down, but one of these three is also down, it means also we have a divergence. So for example, let's say we trade the NASDAQ. NASDAQ is up, meaning we trade NASDAQ, but we have divergence, right? So dollar is down, but for example, RTY is also down, like yesterday it was the case. Meaning we work also with profit target. We interpret that as a divergence. So let's see, I want to show how it works. We have three different trades, major trend. We define it on 5-day. Then the minor trend, the primary, the secondary trade trend is daily, and the entry trade trend is 245. We can also put it on 65 minutes, for example. It doesn't matter. We can put it even on 5 minutes or 1 minute. It needs, so in this case, I am 245 minutes, 4 hours. All right, what do we need anymore? Nothing, just these three indicators. It can happen that this trend, the 245-minute trend or daily trend are down. In this case, we do nothing. We concentrate only what the 5-day trend, 5D trend is doing, okay? If like this one, the 5D is all the time, the indices are above zero and Dixie below, it means that the trend is up, and this is temporarily. We wait until daily is becoming a bot or going above zero, and also the minor trend is above zero, and then we can add our positions. So we have different scenarios here. So let's see now in this case, the 5D is down, but dollar is also down. So we have short trend by divergence. We work with take profit. The dollar must be above zero. So we sell, but we work with take profit. We see now the dollar is on 5D is going above zero, meaning now we are in a trend mode. So if you have put, for example, a profit target here, we can take away the profit target and we let the profit run. But the 4-hourly dollar is still down, so we monitor that a little bit. And we see here now, suddenly on daily and on 4-hourly, all the indices are up, dollar down, and we have a divergence. And we see also here in price action, the market hit back, and suddenly on this supply zone, the market is riding higher. What it means at this moment, we are not expecting anymore that the trend is making a low. We need to wait until the daily and 4-hourly trend is also down again, and dollar is up because we are very bearish. Now let's see what happens. Okay, now we see the daily trend is continuing again, so we stay in bearish trend, and also the 4-hourly trend, index is down, dollar up, meaning bearish. And we see on the price action, the market coming down. Now, here we see again 4-hourly is going up, dollar is up, but stock trends also here. And we see here what's happening here. 5-day trend has been changed. Suddenly all the stocks are in bullish mode, but the US dollar down. What does it mean for us? So I mark first of all where we entered the trade. It was our entry. Now we take out the trend, we close the bearish positions, and we enter a long. So daily also the same, dollar down, all the indices up, and for only the same, meaning now we put our stop, for example, below the support line, we buy one, and we are now bullish. That way we can identify immediately before we take any trade. We know from the beginning if the day, let's say today we come at the office and we want to trade. So we want to know, okay, what is the day is giving us today? Can we make a new higher high, a new low low? The trend will continue or no? So that way we are able immediately to say, okay, trend is up. That means for us, whatever happens, we stay only bullish. We avoid selling. And for example, we come today at the office and we see here, okay, daily is also dollar down or above zero, the indices. And also on 4 hourly, it means we have today a trend day and we can expect that the market is going higher. Let's say, for example, here today we buy another unit. And if we see, for example, form in 4 hourly, right? Let's say NASDAQ is down, or one of these blue lines, or two of them are down, or even all of them are down. So it means we have a divergence, a trend divergence, meaning we cannot expect higher highs today and a breakout today, or maybe if you are near a very important key level, we can expect that we will have a big retracement from that resistance in the opposite side. So we don't speculate to buy and we don't speculate that the market goes higher. We know that the trend is bullish, but we don't want to waste money and time and also energy. So we wait instead until the market is coming down and then the minor trend is up again. Important is that it must have this scenario: dollar down, stocks up. If one of the stocks is up and down, so we can wait until the market reaches, let's say, the low of the day or the low of the range and buy again, but we work then with profit target, okay? In this case, everything is now on trend shift. So now we see here for the first time, the market went higher, but on daily and 5 daily, the trend of NASDAQ still is bullish, okay? But now RTY is bearish suddenly. It means that we are not expecting that we will have a period of divergences, ups, down, or consolidation in front of us. So as we can see, the market reaches this resistance around here at 15,298, but coming back is not able to break that because we have trend divergence, intra-market, intermarket divergence of RTY. Now RTY on low time frames, daily and 4 hourly, is long again. Here is trend mode. Here we have trend mode. Here we have divergence on major trend. The major trend is still divergent because RTY is down. So how can we use that? Now we have trend phase again. We could, for example, in this phase, as we had divergence, we could, for example, act this way and put a profit taking of 1 to 2. So, and we saw that the market hit our profit taking, we take out this trend, but we don't expect the market is higher. Instead, if we, for example, let's say we enter the market here, so, and now we consider the major trend is inactive again, but the daily trend, NASDAQ, is down, okay? So, meaning we still work with profit target. All right, now 5-day trend, perfect. Daily trend, perfect, because all the stocks or blue bottoms are above zero, dollar down, and also for hourly. For us, it means we can, of course, put the profit target if we like, or we can hide it away. Now we take out the profit target. Our put still is in, okay? But we just take out the profit target and we let now the profits run. Why should we limit our profits? It doesn't make any sense. If we're expecting the market is going higher and we see the market breaking this resistance and also this resistance and it's going down. And that way, this trading strategy and indicator is perfect because before we take the trend, any trend, we exactly know should we buy or should we sell? If yes, how should be our bullish strategy? Trend strategy or take profit strategy? So for that, we can, for example, use also, let's say, was it here? Yeah. Or we can put it also to higher to weekly if we are working with divergences. And we see now, okay, we can see, okay, does it break the high of the volume profile, yes or no? The answer is easy, no, it will not. Why? Because the 4-hourly trend is divergence. The major trend, you see here, can you see here? The major trend is up, the trend is active, perfect. The minor trend is making now troubles. Daily mode of the US of NASDAQ is down, and also on 4-hourly and is NASDAQ, S&P, all three are down. Okay, so we have now a minor trend divergence. So coming down, I make it a little bit larger. So we see here exactly how we predicted the market will not break that. Instead, the market is coming down. So because we had divergences. Now what is here? Okay, we can see here, will the market this time, if we buy here, so it's over. All right, that was the trading day of today, the November the 17th. So meaning now, will the market break higher today? And the answer is yes, because currently the answer is no. If we make it bigger, we see here we have again divergence. This is the 4-hourly, okay? So 245 minutes is now US open here. The RTY is down on 4-hourly, okay? So how is it on daily? On daily, we see RTY is green, RTY is green, S&P is green, S&P is green, NASDAQ is green, NASDAQ is green, Dixie is down, Dixie is down, perfect. So we can also work with this monitor watch, but it is only based on daily. We have only one trend, okay? But we need also a higher time frame trend. And on this watch list, we are not able of consider that, okay? So therefore, we have here the possibility of 5-day, 52 weeks, whatever, all right? So the signals are very, very accurate. As we can see here, we had here exactly at the time as the market changes, we have very accurate signals. I will now make another test on larger time frames with you so that you can see it properly, how good this trading system is working. Anyway, This system is working also for other assets. For example, at the US dollar Japanese yen, currently we have signal that the US dollar is becoming weaker and the Japanese yen trend is going to the end. So now on the larger time frame, we see here at in 2021, okay? So as we had 16,700, how precisely the market was working here. So I put it on 52 weeks. And I put this one on 40 weeks. And I hear some people saying now, oh, yeah, but you are investor. I'm not investor, I'm trader. I want just to mention how precisely this trading strategy is working. And this one at 10 weeks. So it is very important for us traders only to know. So let's say we start here, right? Or here in COVID time. To which direction the market is traveling, rising, going, then we can very nicely build our trading strategy. So we see it is at the beginning of COVID, right? So 28th of February, dollar still down here. This is the major trend again, the 52 weeks. So the market fell. The trend, the major trend is up, meaning now some people could take profit, right? So now we have a big, and that means from this period we just take on intraday only long trades. It doesn't matter if you are trading on 5-minute hourly chart, whatever. So we have it all the time, the major trend in front of us. This is of course the big trend, right? But we can also build then later the 5 days trading strategy and so on, okay? Let's say I will put this 10 weeks into 5B. So how many entries you can have? The criteria are the same, dollar down, indices up. Okay, we see now, is it useful for us to get here? We see no, because we have divergences, the uptrend is there, but the dollar is going up here, and on the same time, NASDAQ is coming down. Meaning now we need to wait until the NASDAQ is up again, but we need to be careful, and we expect then the market will sooner or later fall very sharply back because the US dollar trend is also up here. Okay, you see, this is also early warning that the market will have a big crash. That means as soon as we see these signs, we trail very, very rapidly our stops, and we work only with taking profit. But as long NASDAQ is long, we go, but we are careful because dollar is up. So we can add also the bonds into that, the bond market, and track the move of the bonds market secondly with this indicator. You see the first entry was at around 9,000. The current price is 15,800 something. But wait, the best is coming. Okay, now we see exactly here the 40-week and 52-week at the price of 16,500 get read. What does it mean for us? Dollar is up. That means we have perfect scenario. The perfect scenario for the short term is there. Dollar is up, stocks down. All right. So we take out the profits. We go short. Exactly at the top. And it works on every time frame. And that way, from now on, we only take short trades, selling trades only. So we have, for example, okay, we have divergence. We can, for example, gotta see that. So we have divergence. We could, for example, take a profit here, or we can let the trend run because the trend is still active. So it's up to us. All right. For example, we got here with 2 contracts or 2 units. One we liquidate with profit. The other one up the top, we let it run. And then we wait. You see here we have again divergence. So we take the next one too. We can continue this process. Okay, now we see here we had a period here of next profit taking if we liked to. But we stay with the trend. The trend still active, the 52 weeks. Trend down, trend down. So we had here a period of profit taking. That is the reason that the market is going up. And it means this uptrend is for a short time. We expect it's coming back and it's happening. It's very simple. It's very clarifying, giving us very fast information we need. Okay, now we close all our shorts. And from here at 10,600, we have the buy signal for NASDAQ. And you see each time the 5D trend is up and down, we use it for increasing positions. Now we want Here we add another one. So in this period, we see the US dollar is also up a little bit. Now from here, we expect that sooner or later we will have some signs of divergence. So, and as we have seen, also in this period, the trend of NASDAQ is still long, very strong long, especially today also we see now today we have again a trend day, the 4 hourly is up again, and the price of NASDAQ is for 15,853. As I said, we can use it for any kind of asset. So I make another example. You see here I have a bunch, I have 52 weeks, then 50 weeks and so on until 1 week. And only for example, let's say I want to trade NASDAQ. I take a bullish trend only if all the trends are above zero and dollar is down. Okay, so but now let's check for the currency market. So this dollar crossed 25, so meaning 25 currencies. So if you want, for example, let's say I want to trade the Japanese yen, okay? So, and I want to trade the Japanese yen based on short term. In this case, the time frames I use is or are 5D is for the major trend. D is for minor, only 5D and D, and 1 day. So then it was the last time as the price was above 150 in the Japanese yen. We want to see if it's working here too. We are using again here the correlation. So for the correlation, I have put my personal criteria, okay, but you can use your own if you like. For my criteria, I say if dollar index is above zero, US dollar Swissy is above zero, US dollar Japanese yen is above zero, US dollar Canada, US dollar CNH are above zero, with other words, all these three. And on the same time, euro dollar and Japanese and British pound sterling must be below zero. The red have to be below zero, the green have to be above zero. Then I take a long trade in Japanese yen. We can, for example, also say, okay, we put this away, we put away Canada, US dollar, and also US dollar Swissy. So we can do it and we can take the trend. But I found out if I use also these currencies, they give me better perspectives because, for example, I avoid then to get in such situations where we have again divergences. And this will be then the criteria for me that we will have a divergence day in front of us. Let's say we want to buy the Japanese yen, okay? And this is the market conditions. So what can we say here? We can say on the major trend, US dollar Canada is weak, but all the other US dollar pairs are strong. We see here dollar, euro, and pound also below zero. And on the same time, on minor time frame, So to me, for example, if I want to mm, take a trade here, I am going only long, but I put, for example, my stop here and I work with taking profit. So from 1 to 1 point. So meaning I am trading in direction of the trend, but I am using this divergence only in direction of the trend. So, and let's say in 1 hour, the market opens, okay? So the bell rings and we want to trade. Now we have 1 hour time. Our strategy is ready. We exactly know what is expecting us today. We have the trend is bullish, but we have divergences, so we can expect that the market goes somewhere very sideways. So we see now the greens are above zero, but British pound is also above zero. It has not to be. We still have a divergence here. Now, if here, for example, the British pound, and we see here, dollar is down, right, from the beginning. Japanese yen is also down. We stay in the trend because we have now inter-trend divergence. It does not mean Japanese yen coming down. It just means that we have divergences because dollar is down on the same time, the dollar index. Another possibility is that we can, for example, yeah, it happened now. I wanted to say take profit, but the trend is bullish. So we can, for example, take profit before our profit target hit. So this is correlation with other dollar pairs. We can also take only Japanese and Dixie, but I wouldn't take only Japanese yen. It's working. It's working also very fine. But if you like more clarifying situation to know exactly if we work with profit target or in trend shift, better we use the other correlation on the same time too. And you see divergence from the beginning of the day. We knew exactly it will happen. So we don't get shocked because from the beginning, before the game plays, we exactly know how the game play will take place here. So we see here now for hourly, the daily is down, but the Dixie is up. The trend is over. Like now here, we close the account, the trade. We take profit. We go short because now the trend for the short term is over. So euro dollar and pound dollar Dixie down, and the other dollar pairs down too. Now we can increase our shorts cover, and we see what happened. Look how fast. Before it happens, we get the signal, perfect entry, and now we take profit here and we go long again. Now the market will turn. This is on 1 hour time frame. Now on daily here, dollar is down, therefore we have the divergence we can see. So on the second day we come at the office, we know, okay, now we go long, we took the long, we wait a little bit, we don't take it out, so just wait. And that way it is working very, very accurate and very properly. It works also on commodities. I have been a lot of back testing on that. So, and I hope you like this indicator. The indicator is very, very simple. All we need to consider is we can define our stop loss. And from the beginning, we can say, will it be a divergence day or will it be a trend day from the beginning? So I hope you liked it and have a nice day.